A little bit more about obtaining an understanding of the entity and its environment. We've got different matters. Now, you don't have to memorize. There's a lot of these. You don't need to memorize them. But these are just many more examples, as outlined by the AICPA, which are going to, following slides, dictate what you can do to assess and possibly, again, like a checklist, right? You can use this like a checklist as an auditor to see, have we assessed this risk? Have we understood this part of this client's business? Following matters the auditor may consider when obtaining an understanding of the industry, regulatory, other external factors. We're going to see regulatory concerns, macroeconomic concerns. These examples cover a broad range, but it's not a complete list. It's just common ones that the AICPA has published. First, we're going to start with industry and other external factors when you are assessing the risk within a client. Industry conditions, market competition, are they in the decline because their competitors are doing much better than them? What's the demand for their product? Do they have capacity to conduct their product and conduct their business? Are they getting priced out of the market? Is there cyclical or seasonal activity? How is the technology relating to their products? Do they have the supply to keep up with the demand? These are all factors to consider. You're not here to assess the profitability of the company or judge them or value them, right? But these are all factors that can lead to many other realizations, such as the company wanting to commit fraud to keep up with perceived value. Also, just going concern issues. We'll talk about that in our going concern lesson, but is there a risk of this company going under? And if there is a risk, is that risk disclosed to the readers of the financial statement? Other external factors, general level of economic activity. Is there a lot of growth? Is there a recession? This will also help you assess. If they say they have a 5% increase in revenue and the economy is booming, okay, that makes sense. But if the economy is going in the toilet and they're still having massive growth and it doesn't really make sense, that's probably something to investigate. Interest rates, availability of financing, inflation, currency revaluation, just macroeconomic external factors that could be having a bearing on the business. How about the regulatory environment? Many industries go through massive changes, whether it's the semiconductor industry and the constant global geopolitical battle between countries to control these ever important chips that relate to most industries these days. What about, is it, let's say, cryptocurrency? There's a specific regulatory environment there. Is it the financial industry? Think about how much regulation happened after the 2008 financial crisis. So many industries out there. Are we dealing with maybe, let's say, oil rigs and very risky jobs? There's a lot of regulatory considerations when it comes to safety and worker safety. We've got labor unions, strikes. We are also considering accounting principles, industry-specific practices, the regulatory framework for a regulated industry. Are there extra criteria they need to meet with? So generally speaking, the public company's got to report to the SEC, the PCAOB, but other companies in specific industries have other administrations they have to report to. Right? Pharmaceutical companies, food companies, they need to report to the FDA. That could be something to consider when you're understanding their control environment, understanding their business environment. Environmental requirements, are they breaching environmental requirements because they're dumping in the lake? I'm laughing, but it's actually really sad. I'd love to be able to swim in the Hudson River someday, but probably grow some extra appendages from the radioactivity in the waters around New York. But hey, that's a dream of mine. Environmental requirements affecting the industry and the entity's business, legislation and regulation. Some industries have been completely canceled out just by regulation. I mean, we could think about, let's say, vaping, Juul, all of that splashed right away because government passes a bill. Now, yes, you would have to write down your business significantly because of that. And as the auditor, we want to understand that. So we see that they actually do that. It's unfortunate. We're not here to discuss what regulation is positive and benefiting the American industry and populace, but this does happen a lot in many industries, whether it's small or large, it still has an effect. Taxation, do we see a massive increase in taxation on certain industries? Tariffs, that's another big factor. Governmental policies currently affecting the conduct of the entity's business. Monetary policy, fiscal policy, financial incentives, tariffs, trade restrictions. If all of a sudden we're an American auto manufacturer and every other country in the world puts 100% tax on our cars, then we're probably not going to sell as many cars to other countries. And as such, that's going to have implications. You need to understand those and take those into account. We want to understand and consider the business operations. Where are they making their money from? That's pretty important. I mean, overall, right? How are we making their money? That's going to tie into pretty much everything we're going to audit. Products or services and markets. Who are we selling to? Is there any strange relationships? This is just in general to understand the business. It's very important. As much as I myself have been just a mindless accountant, plugging away at spreadsheets and just doing formulas and not even thinking about what I'm doing, just getting the job done. Overall, for the audit, the auditor needs to understand all of these factors so they can understand, okay, for an industry such as manufacturing, it's very strange that you have a balance in your, let's say, prepaid, something like that. I'm thinking of a great example right now, but trying to understand what is normal and what's not normal for your particular industry, particular business. How are operations being conducted? Do we have certain subsidiaries? Do we work with foreign governments? Something like that. You work with a foreign government, that government may be particularly known for being corrupt. That's a big thing. Is guess what? Can't really report bribes. That's quite illegal. So something to investigate there. How would you know that? You would know that through understanding how the company conducts its business. And lastly, outsourcing, joint ventures, alliances. How is that applying to the business? We want to understand business operations. Are they conducting e-commerce, geographic dispersion, industry segmentation? Where are your factories? Where is the majority of your work being done? Employment. Are we not paying people cash? Are we just doing stock options? How are they working with the unions? How is your pension plan doing? All of these factors, understanding, because this would relate to the accounts. If they say they have a pension plan, but then they don't report a pension plan, we got a problem. Where are the location of all these items? What are your key customers? Because if you see your key customers are companies such as Circuit City and other formerly in business companies, that's probably not good. All the bankruptcies, if your key customers go bankrupt, that's not going to look good for you as a business. Who are your important suppliers? Understanding revenue recognition, expense recognition, accruals, FOB shipping point, FOB destination. Gotta love those. Understanding research and development activities and expenditures. How is the money being spent and how does that process look? And transactions with related parties. Related parties are their own whole important topic. So we want to understand that as we go through. Investments. What are the company choosing to invest their money in? Well, do we have any acquisitions, mergers, disposals? I mean, that would be quite important, right? You got to know what you're auditing. And if they dispose of half their company, well, you're not auditing that half anymore. Or did they buy a whole new segment? Well, you're now auditing a whole new segment. Quite important because you got to assess, do we have the capabilities to audit that? Other investments such as securities and loans. Are they buying up a lot of stock, buying up a lot of debt? Are they issuing a lot of debt, issuing a lot of stock? How are they conducting their business? Are they raising money to invest in capital, such as PP&E? Investments in unconsolidated entities, partnerships, joint ventures, investments in entities formed to accomplish specific objectives. Competitors in an industry can join up together, form a joint venture. Look at the whole Got Milk campaign. That was not just one company. That was a bunch of dairy farmers, large companies got together. That's an example of a joint venture. Lastly, the life cycle stage of enterprise. Is this company just starting up? Is it a startup? Is it growing? Is it mature? Or unfortunately, is it declining? We're just rolling with these, aren't we? I mean, feel free if read these and just move along, go for it. Or if you want to hear the melodic sound of my voice, keep listening as well. How are we conducting financing? What's our group structure of major subsidiaries and associated entities? Debt structure. How are we raising money? How are we raising money and what are we doing with it? Are we fudging how we're raising money? I don't know. Leasing of property, plant, and equipment. Beneficial owners, who's benefiting here. Related parties, considering these always. Are you getting too cheap of an interest rate because you're borrowing from a friend? Use of derivative financial instruments, super important there to assess. Financial reporting. Don't worry, everyone. We are likely almost done with these considerations and understanding the business environment. Financial reporting. What are industry-specific practices and principles used? That varies from industry to industry. Are you a loan provider? Are you a real estate firm? That's going to vary quite differently from an agricultural company. revenue recognition practices. If you're construction, you're going to have, if y'all remember from FAR, we've got construction in process. We have to recognize that percentage completion method. Accounting for fair values. How are you valuing out your assets? That's quite important. You don't want to have the incorrect valuations on your financial statements, which would skew investors. Inventories, going through those, understanding how that works. Foreign currency, asset liabilities, and transactions. Foreign currencies fluctuate all the time. So you want to make sure you understand how that's working. Industry-specific significant categories. If you're a bank, you're probably going to have quite different categories than a manufacturing company would have, or as a tech company would have. What are the items, what are the accounts that you're going to see on your balance sheet and income statement? It's going to be quite different there. Your insurance company, you're going to see very different than if you were a toy manufacturer. How are they accounting for unusual or complex transactions, including those in controversial or emerging areas? Stock-based compensation, definitely a little bit something to look into much further, a lot more complex than just paying out cash. Lastly, how are the financial statements presented and disclosed? Continuing on in understanding our business, our client that we're working with, do we understand these particular existence of objectives, such as industry developments? These risks here, is your industry changing? Are your competitors building out other segments, such as are you Microsoft and are you expanding into cloud computing and maybe you don't have, right, this is not true because they do quite well for themselves, but do you not have the personnel to adapt and build because maybe Amazon and Google are getting into that heavily? That's going to be something to take into account. New products and services, similarly right there. Product liability could also increase. If you've been selling products for years and those products are now turning out to be dangerous, that's something that you need to take into account and understand about your client. Expansion of business. Maybe you are expanding your business and all of a sudden people don't want your product, or you just thought people wanted your product and they really don't. That's going to be critical to understand when you're conducting an audit of a client. What about new accounting requirements? So I'm going to go back to the leasing standards. That is something that relatively in the past couple of years has changed. Regulatory requirements. You see this particularly in I just keep talking the United States because guess what? We're taking the American CPA exam. Marijuana being legalized, that's a massive component of a lot of companies. Jewels and vape products are being completely banned. The whole industries are being created and whole industries are being wiped out. That affects the environment of a company and is pretty important to understand. Can you do business with certain companies because your state does not recognize that? That's a whole something to take into account. Maybe your state bans you from doing business with a certain industry because it's not legal in that state. What about current and prospective financing requirements? So are you unable to raise money? That's a possible concern. What about the risk appetite of managers and stakeholders? People who invest in, let's say, Warren Buffett's Berkshire Hathaway, a lot less risky than those investing in cloud startups and data analytics firms. Lastly, what are the effects of implementing a strategy, particularly any effects that will lead to new accounting requirements? A risk here might be that implementation of their new strategy just is not done. We also, as an auditor, want to assess how is the entity performing. Now, this is going to tie in with, again, if they're not doing well, potential increase in the risk of fraud. Also, again, disclosing possible going concern issues and writing disclosures in the footnotes and possibly them lying about profitability to their investors. We want to understand key ratios and operating statistics, performance. So we're not judging them. We're not valuing them. We're not trying to rate this company on how well they're doing financially. We just want everything to be accurate. We want to get an understanding of how they're doing. Because again, this ties in. If they are not doing well, the balance sheet should reflect that and the income statement should reflect that. Performance indicators, period on period, performance, revenue growth, profitability. How about measures of performance, compensation policies, industry trends, just trends in general, forecast budgets and variance analysis. Are they forecasting a lot of growth when in reality the economy doesn't look good, their business doesn't look good? Analyst reports and credit rating reports. If their credit rating is in the toilet and they can't get financing, then why does it look like they might be financing a lot? That's something to investigate. And lastly, analyzing their competitors, because those are the people that may put them in the ground. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.